Sir, how are
Hello.
you? Hello, hello. How are you, man?
Good. How are you?
Oh, good, good. Well, thank you for your time. Thank you for being in this show. So I already had your friend Jay Woods, Ralph Campora,
Yeah.
and Tyler Wood.
Yeah.
So it's an honor, and on behalf of the Venezuelan community and some Latin Americans that are around, I'm so honored you have you today.
Happy to be here. I'm looking forward to it. For me, I grew up in Miami. My family's from Cuba, Maria and Juan Carlos Sr. And, we have a big Venezuelan community, less so when I was growing up 20, 30 years ago. And more now, the area of Doral, they call it Little Venezuela in,
Oh,
my,
yeah.
in Miami.
Yeah. So but let's start with that. So tell us more about yourselves, born and raised in Miami. Tell us more about how you got involved in technical analysis, all this journey that you've been through.
So I played baseball growing up in Miami. Can you imagine a Cuban from Miami playing baseball?
Yeah.
Can't believe it.
No, I don't.
So I played baseball, and then I went to school. I played Division I baseball in Connecticut in Fairfield University, and right outside of Greenwich, Connecticut, which is the capital of hedge funds all over the world, and was running in my backyard, and it was a great experience. I had an internship when I was in college in Merrill Lynch, and that's when I fell in love with New York City and Wall Street and the whole thing. And then I wound up started working on the street, learning the hard way in the grind, and then started my own firm 8 years ago.
Well, that's great. So you're in New York right now, correct?
I'm back in New York. 5 years ago, I left New York and I moved to California. For a brief time, I got to enjoy California. I lived in Sonoma because I'm also in the wine business. As what started out as a hobby, just
Yes.
like drinking good wine, like that seemed like a good hobby.
Yes.
Now we're making some stuff, and it's turned into a nice, fun project.
Oh, that's good. Okay. So, and now tell us more about your company, All Charts. What are you guys doing? What service you provide? So all these kind of details that you want to share
Yeah.
with us.
So, originally I started a blog. This was 10 years ago. I started a financial blog just as a way to, express what I was feeling, and put my thoughts on paper. And I recommend everybody, every investor, even like if you're not an investor, it's great to really put your ideas. It forces you to really think things through if you're going to end up writing about them. And then if people are actually reading it, like you better really think about it and make sure what you're writing
Hmm.
isn't a bunch of boberia, as my grandmother would say. So I think that that's so important. So I started doing that, and I didn't really know why I was doing it, but like my smart friend said, JC, you need to write. People need to read what you're saying. Da 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 da. I was like, all right, whatever. Because I found myself in a position where when I didn't listen to those guys, I regretted it later. So I found myself like probably should listen to these guys. So like they were starting blogs, and that ended up working out very well for them as well. And I listened, so I had a blog, and then I didn't really have anything to sell. I mean, I was managing money, so I would put like at the end of my blog post, hey, if are you interested, these are information from my hedge fund, whatever. Because I was managing a hedge fund at the time. And then the truth is, uh, the running a hedge fund is super expensive. I was owning a general partnership, so it was really expensive. So I was like, I had some friends in Detroit that were like, hey, JC, you should sell your research because you're the only one that sees it. And I was like, all right, if nobody buys it, I still have to do it. So, and if people buy it, great, we'll make a couple of extra bucks to help pay the bills for running the fund, a startup. We had under $10 million in assets. So very quickly that just blew up. And all the hedge funds and all the hedge funds that I was trying to be were calling me for the research, and the pension funds and the family offices. So, and the financial advisors all over the world, throughout Europe, not just in America. So we found ourselves, being able to provide a great service for people all over the world. And sure, I'll let people see all my homework. I'm cool with that. And, it still really helps me to this day for a couple of reasons. Number one, putting together the research, organizing my thoughts, like I said, in a blog post is one thing. in a whole research platform with a whole team is a whole nother thing. So, you know, not just me, but our whole team, we win 1,000 times over just because we're actually doing the work. So number one. Number two, I get to talk to really smart people. Like literally almost every day, pretty much every day, I'm talking with portfolio managers that manage $1 billion, $9 billion, $400 million, $14 billion, just on and on and on, and all different perspectives, right? A family office in San Francisco that it's like a guy from China who made a ton of money in the 90s in tech, and now, you know, they have a diversified portfolio of tech, which is basically a bunch of, it's the NASDAQ 100 is what it ends up being. So, you know, we can help them manage risk with their strategy. Then we have another trust in Texas, and, you know, this is a bunch of families, and they meet once a month, and that once a month we spend 1 hour with them, you know, for example. So every institution has like a different approach, and we help them in different ways. But the truth is, I'm winning in these conversations because I get to find out how they're thinking and, you know, what sort of decisions they're making and why they're making them. And that helps me, you know, that'll always help me forever, those conversations.
Yep. So you do you specialize in a specific asset, or was more diverse, of like the technical analysis that you guys use?
Yeah, so anything that's liquid.
Okay.
So stocks, obviously, commodities, all of them, everything from oil and gold to rough rice and corn, and everything in between. You know, we even cover like cardamom futures and turmeric futures for our Indian clients.
Cryptocurrencies too?
I'm sorry?
Cryptocurrencies?
Cryptocurrencies as well. Again, anything that's liquid, that's driven by
Yeah.
supply and demand,
What's
ETFs.
your favorite one?
Well, my favorite one, and what I think is the most valuable, is the relationships between them, which is what we call intermarket analysis.
Correct.
And, you know, for me, that's really where you see money flow. You know, again, time and time again, that's really the value. So it's not like one specifically. It's more so how they behave, how they dance together.
Correct. Correct. So based on the same ideas that you telling me, so how do you see the market? Let's start with the US dollar. I think that's a tricky one. So, and I tell you why asking this question. So
Okay.
let's start with that. So what's your analysis? What's going on with the US dollar?
Well, I think there's two different questions that you could be asking. What's going on with the US dollar and what's going on with the US dollar index?
Yes,
Right?
correct.
Which is
Yes.
basically the euro upside down. And what's going on with the US dollar index is that it's done nothing. It's just big nothing.
It's like Shopee and do whatever is
That's
like
just what it
it's not.
is.
Yes.
It's not an uptrend. It's not a downtrend. It's what we call a hot mess, is what we call the dollar index. But when you compare it to some of the emerging market currencies, you know, Mexican peso and all that, like you've seen serious rippers in the US dollar. So there's underlying strength in the dollar when you go currency by currency rather than an index that's 60% euro.
Okay. So in the same context, so how do you think it might impact the treasury bonds, and how those we'll see, or how you see the treasury bonds and trends on
You
right
know,
now?
we've done the work and we just haven't found that there's a consistent correlation between the US dollar and interest rates. It's just not there. Sometimes there is a positive correlation, sometimes there's a negative correlation. Usually, from what I've found, there is no correlation really, particularly when you talk about like the US dollar index, right?
Yes.
But in terms of, you know, rates and the dollar, I'm just not seeing it. The only times that it's really quite obvious the correlation there is when volatility in equity spikes and markets are under stress. You see a coincident flight to safety to the dollar and treasury bonds, right? So there you'll see an inverse correlation between rates and the dollar. But I mean, those are in rare occasions where the markets are really under stress. And right now, that's just not the case. So how do I think that the dollar is going to affect bonds? I don't know. I don't know that it is, or if it is, it's not anything that I think is evident in the money flow or in the analysis. So I'm just not seeing that right now.
Okay. And in overall, the S&P 500s how you see right now the so it's being now volume after the big decline is being, some people call it dead countdown, some people say, well, we over with the correction, I think we're going to probably touch the all-time highs again. So what do you think in that one?
I think 2,900 is a big level. I think if the S&P 500 is above 2,900, which, let's see, it closed today at above 3,000. So 2,900, 2,950, that's my level. If we're above that, it's hard to be bearish. Not to mention that, if we can get sector rotation, I mean, financials this week, whoa, where have they been? So, and transportation stocks as well. So if we can get rotation, you friends with Ralph Acampora up there in Minneapolis, right? What does Ralph say? Ralph says, JC, the sector rotation is the lifeblood of a bull market. And that's the truth. So if we are getting rotation, that's characteristic of a bull market, not bear market.
Even with all the fundamentals, like high unemployment rates and all these GDP numbers, what do you think it might happening right now with those conditions?
We're in the camp that the market is very smart, and we're not smarter than the market. So for us to have the audacity to think that we can decipher information from those GDP and unemployment reports better than the rest of the market collectively, I think is it's a little conceited that you think that somebody thinks that would be possible. So for us, we trust that the market is much smarter than all of us combined. So we're not even going to attempt to read any of these 10Ks or 10Qs, and thank God, because that doesn't sound like much fun to me. I'd rather be looking at pictures and listening to good music, quite frankly. So I thank the Holy Lord that I am a technical analyst every day of the week. So for me, the market's a smart place. They'll do that homework for me, and I'll see the money flowing if they think that's good news or bad news, or usually no news at all. And what's good is that we're not in the media. We're not in the business of making noise. Remember, like most of the financial media is there to fight for your attention. They're there to distract you from actually getting things done, right? That's what the media's job is literally to do, is to entertain you. So they say, not distract, entertain. Fine, tomato. So you have to understand that. So since we don't have to distract you or entertain you, we got to tell it like it is, and we're going to make money in the market. In some cases, there's not a sexy story. It's a boring cop-out answer. Like, sorry, man, I don't see anything between the dollar and bonds. Like, I'm not going to make up this whole wild story about like growth and blah, blah, blah. Like, I don't have time for that. Like, that's silly. So for us, I think we focus on price. We know that the market is very smart. These are people with a lot more money getting the research than you can ever imagine. They have more money than the governments. They're getting that information before them because they have more money and more at risk. So they're going to spend it. So let's just trust them and forget these stupid reports that are just, by the way, they're just estimates anyway. These are GDP like estimates or unemployment estimates. Like, we know for a fact they're going to be revised. And as your boy Ralph always says, price will never be stated. Earnings will be stated, but price is fact.
Yes, correct.
That's your boy
market
Ralph
discounts, everything.
Yep.
And also, let me ask you this. So there's another, I think the big topic right now is gold. And after being in that range for a long time, and now it's breaking up. And so what do you think about that?
I think the most bullish thing something can do is go up, right? And precious metals have been doing well. There's no question about it. We got bullish. So like, we had our upside objectives. We were bullish last year throughout 2019, and our upside objectives got hit right around September. And if you recall, the reason those were our upside objectives, right around 1580 to 1600, why was that our upside objective? Because that was potential resistance that we saw from former support in 2011, 2012. All of that support that then broke in 2013 That was 1580, 1600. So as bullish as we were, that's where we wanted to take profits. So I said, okay, in September, mission accomplished. See you later. Now it's somebody else's problem. And like, I got a lot of hate for that. Be like, oh, JC, you're such a flip flopper. I'm like, I'm a flip flopper because we were bullish and it hit our target, and now I'm out. Like, and now you guys, now you're beefing with me. Like, what do you mean? Like, I got you in, I got you out, and you're still not happy. So then we got out, and then everybody's like, every day I get an email. JC, what do you think? When do we buy gold again? I get that question every day. It's crazy. People love gold. They were like talking about gold. Excuse me.
Bless you.
So they love talking about gold. And I was like, okay, when GDX takes out 31, which is the resistance from that big base, and when gold gets above 1580, 1600 and can hold those levels, we'll get back in. I don't know how long that's going to take. That could take a month. It could take a quarter. It could take a year. I have no idea, but I'm not going to sit around waiting. Just like, call me when the party starts and I'll show up with a six-pack, you know? Like, well, why am I going to be the first one there?
Yeah, I agree with that. So now let me ask you something else. So I think you got your CMT designation back in 2009 or
2008.
Okay, yeah, I read.
Right on time.
Yeah. So, most of the people here, and they follow me, and also some of the people that I follow too. I'm still in that process to get my destination too. But tell us more about your experience before and after you got the destination. What all the knowledge that you got from the CMT.